Welcome to The Impeccable Investor. In this video, we're going to discuss, are we in a bull trap? Is this really going up, or are we about to shoot back down? This is a question that a lot of people have, and I want to get it answered. So first things first, thank you so much for getting The Impeccable Investor Instagram account up to 100,000. Please look at the description below to check out our free Discord and Instagram and so many more. Now, let's get into that video, but make sure you smash that like button and subscribe because I'm coming out with videos every single day since we're all in quarantine. Are we in a bull trap? Well, what is a bull trap? Well, first let's talk about trends. All right. So when you have an uptrend, a stock is making higher highs and higher lows. The highs are getting higher and the lows are also getting higher. So what happens naturally in an uptrend is we go up, we pull back, we go up, we pull back, we go up, and we pull back. It's the natural progression of an uptrend. Well, the opposite happens in a downtrend. A downtrend is when the lows are getting lower and the highs are also getting lower, which means we're moving down. So how it works in a downtrend is when we start to push down and we push up, this is the point where it goes back down. So you know how in an uptrend, it pushes up, it pulls back, it goes up. Same thing in a downtrend. It pushes down, it pulls up, and then it pushes down further. So the real question is that if you now know what a bull trap is, it's when it goes up because it's about to fall right back down. Is that what we have here? A downtrend, right? You can see here how it pushed down, it pushed up, it got rejected, and then it fell further. Well, are we seeing that on a longer time frame here? Well, there is so much to consider, and that's what I'm about to discuss here. As we look at these fundamental price point levels where we see a lot of support and resistance come into the market, we can see here that we bounced off this support and we are above this support, right? So this shows something. This shows that yes, it came down this far, but the volume stepped in here and we kind of had a reversal. We got rejected at this resistance. We came back down and then we pushed back through it, which is a strong sign of support. Now, I know we don't want to believe we're in support because of jobless claims up as high as they are. The market isn't even open. Our economy isn't producing. We're not exporting and we're hardly importing, right? So we have a lot of things that are going wrong with our economy fundamentally. But looking at it from a technical perspective, this is what we are seeing. We are seeing a downtrend because we're under this line, which is the 200-day moving average. This is highly regarded as the idea of where the market is trending. So since we're below it, we're defined that we're in a bear trend. We're trending down. Now, what we're seeing here is we're pushing up pretty high. We're kind of overextended at the point where we kind of have this doji here. If you don't know what a doji is, it's a candlestick pattern that shows when the market is indecisive, right? So this shows that a reversal is going to happen when it occurs at major support and resistance levels. So as you can see here, we had dojis at this high. It kind of came down. You can actually see it really well here. You see we had a doji here, and then we came back down, a doji here, we came back down, a doji here, and then came back down, right? So it's a very strong level when it happens at a resistance zone, which is kind of what we're seeing here. So my idea is if we're in a bull trap is depending on what happens this upcoming week, right? If we go below this doji here and we sell off below this 270, 260 level on SPY, which tracks the S&P 500, then we're going to head back down, probably break under, probably break under 220. Come on. Probably break this 220 level and then head back down to $200. That's all if we break below this little doji candle that we have here. But if we can get above it and if we start holding, then it won't surprise me if we get up to 300 because that's where our next resistance will be, because it's a whole dollar level, and at the same time that's where the 200-day moving average is. So rate cuts have been cut faster than they have ever been cut before, right? So during previous crises and stock market crashes, it takes the Fed about 12 months to cut the rates all the way down to zero. But they've done it in a matter of like 3 months now. So interest rates are zero, which means it's so easy to get money. Money wants to come back into the market. The government and the Fed is allowing them to buy up the money supply in the economy, which is also pushing this up. So the Fed is doing an amazing job pushing this economy up and keeping it open. So really, we don't know how much longer we're going to stay in this. It really depends on this level right here. If we break above, we're most likely bullish, right? If we break above, yeah, and if we break below, we're most likely going to see that next leg down. But it all depends on when we're allowed to start to reopen the economy. If the economy can open up soon, we'll be fine. We'll go back to business as normal. We'll start to recuperate. We'll probably see taxes go up so that we can recoup the $2 trillion we just spent on the stimulus package. But outside of that, we just need the economy to open. All right, guys, that is my thoughts on if we're in a bull trap. It really does look like it from a technical perspective. If you can see here, this is a consolidation pattern. It squeezes here and then it comes back down. So that's what we're looking at from a technical perspective. Now, guys, smash that like button if you haven't already, and subscribe. We're coming out with videos every single day. Discord group chat is linked below, so check that out. All right, guys, see you in tomorrow's video.